Welcome to the Self-Employed Basics mini lesson, part of our Teaching Tax Flow Entrepreneur course. Excited to jump into the subject with you, and let's roll right into the agenda. We're going to talk on self-employment, about formation management and asset protection, taxation reporting and fringe benefits, look at some IRS guidance, and then we're going to give you the secret sauce, some calls to action. Someone that's self-employed is someone that just starts a business without much formality, and anyone that is in business or owns rental property personally is by default self-employed if they have not formed an entity. So, nice thing about self-employment, you're not required to file any formation documents with state filing agencies. Some municipalities and localities do require you to file some paperwork as someone that's self-employed. We're going to talk about that in a bit, but there's no state filing agency requirements. The owner is referred to as a proprietor, thus the term sole proprietor. No formal entity formation documents are required, as I said, and business simply begins, exists, and concludes with the proprietor's activity. So if the proprietor closes up shop one day, the business closes also. There's not a filing with a state agency. This is really best for an owner that wants simplicity. So the biggest advantage of being a self-employed or sole proprietor, you're going to hear those terms used interchangeably, is that it is simple. Now, the proprietor is typically liable for the debts of the business. As we talk about often in Teaching Tax Flow, we are looking at tax planning and strategy. We're not looking at the legal piece of it, and we do highly recommend you work with a lawyer or an attorney and make that part of your personal board of directors to get that guidance. But someone that's self-employed does not have that asset protection. No taxes paid at the entity level on the federal tax return, and all of your activity is just reported on the proprietor's personal tax return. So if someone owns a business, they would file a Schedule C, or if they own rental properties, that goes on Schedule E. Double entry bookkeeping is not required. Typically just a profit and loss is required when you're filing the proprietor's or self-employed person's tax return. There are no fringe benefits available to the proprietor, but they can deduct health insurance premiums for themselves or their spouse if they have self-employment income. Some proprietors just have rental properties, and rental property is not self-employment income. It's very rare that it is. The business must use the same tax year as the proprietor because you're just reporting everything on that proprietor's personal tax return. And as I said, Schedule C is where you report net income from a business, and that is subject to self-employment tax. The proprietor may also qualify for that 20% Section 199A qualified business income deduction. Let's take a look at the IRS guidance. Publication 334, this is the front page of it. This really lays out the tax guide for someone that's a small business, and including the individuals with Schedule C, so those proprietors. You're looking at Schedule C as well. This is where a sole proprietor or someone self-employed is going to simply report their income and their deductions. You can see that a balance sheet's not required, although you do want to keep track of your fixed asset purchases, and that is right here. If you're a proprietor that owns rental property, especially if it's residential, you're going to want to look at IRS Publication 527. You're looking at the front cover right now. And then also you're going to want to look at Schedule E. On Schedule E is where you're going to report your rental income and deductions. We have a lot of content in our Teaching Tax Flow REI, or Real Estate Investor, mini lesson that dives deeper into the tax reporting. But this is where a self-employed person is going to report their rental income, Schedule E. All right, let's look at our calls to action. If you have a business or you're looking to get started, take a look at that entity business type chart that we have in our ecosystem and determine if you should be self-employed, if self-employment makes the most sense. If you're concerned about asset protection and you're comfortable with the compliance costs of forming an LLC, because there's always that cost benefit, then consider forming that LLC. If you're self-employed, consider forming an S corporation to legally and ethically reduce self-employment tax paid. We have another mini lesson specifically on S corporations. You can either create a corporation and elect to be taxed as an S, or you can create an LLC and elect to be taxed as an S. Proprietors with real estate very, very rarely benefit from making an S corporation election. In most cases, someone that's concerned about asset protection that owns real estate is most likely just want to file an LLC or limited liability company. Talked about how sole proprietors or self-employed people do not enjoy fringe benefits other than getting to deduct their health insurance premiums. If you have a spouse that's doing legitimate work for your business, you might want to consider hiring that spouse as a W-2 person and then passing along fringe benefits. They could be retirement benefits, medical benefits, or Section 105 plan benefits. Finally, some states do have tax or requirements for even self-employed people, so definitely take a look at your state-specific tax laws. Most businesses start off as self-employed, so I hope you enjoyed this self-employed basics mini lesson. Take care and have a great day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself, everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.